Hello everyone. Today we will discuss corporate actions in stock market. Let's see what a corporate action is first. A corporate action is any activity that brings material change to an organization and impacts its stakeholders, including shareholders. These events are generally approved by the company's board of directors. Shareholders may be permitted to vote on some events as well. Let's see some of the corporate actions. They are dividends, bonus issues, stock splits, rights issue, buyback of shares, and spin offs. Mergers and acquisitions also come under corporate actions, but since it's a big topic, we will be covering it in a different video. Let's see dividends. According to Investopedia, a dividend is the distribution of reward from a portion of the company's earnings and is paid to a class of its shareholders. Dividends can be issued as cash payments, as shares of stock, or other property, though cash dividends are the most common. Basically, a dividend is a portion of the company's profits. When a company makes a huge profit and it's not being reinvested, the excess profit is divided and given to the shareholders in the form of dividends. Now let's see bonus issue. A bonus issue, also known as scrip issue or a capitalization issue, is an offer of free additional shares to existing shareholders. A company may decide to distribute further shares as an alternative to increasing the dividend payout. For example, a company may give one bonus share for every 5 shares held. I think this is a pretty self explanatory. Instead of giving dividends, a company will make the profits into additional shares and give it out to the shareholders. In this example, if a person has 5 shares, then they get one extra bonus share. Now let's see stock split. A stock split is another common corporate action that alters a company's existing shares. In a stock split, the number of outstanding shares is increased by a specified multiple, while the share price is decreased by the same factor as the multiple. A stock split, however, is a non event, meaning that it does not affect a company's equity or its market capitalization. A stock split basically is when they split a stock's value by a certain multiple. By a multiple, let's say it's split by 2. Then if the value of the stock is, or if the value is priced, if the stock is priced at 100 rupees, then it'll become 2 stocks worth rupees 50. Now let's see rights issue. A company implementing a rights issue is offering additional and or new shares, but only to already existing shareholders. The existing shareholders are given the right to purchase or receive these shares before they are offered to the public. A rights issue regularly takes place in the form of a stock split and can indicate that existing shareholders are being offered a chance to take advantage of a promising new development. I think this is also very self explanatory. A rights issue is basically like a small privilege given to the people who are already having shares. So they get the option of purchasing or receiving these shares before they go to the public. Now let's see buyback of shares. A buyback, also known as a share repurchase, is when a company buys its own outstanding shares to reduce the number of shares available on the open market. Companies buy back shares for a number of reasons, such as to increase the value of remaining shares available by reducing the supply or to prevent other shareholders from taking a controlling stake. Sometimes companies will also buy back shares when they want to invest more in the company and having more control is useful. Spin-offs. A spin-off occurs when an existing publicly traded company sells a part of its assets or distributes new shares in order to create a newly independent company. Depending on the situation, a spin-off could be indicative of a company ready to take on a new challenge or one that is restructuring or refocusing the activities of the main business. Thank you for watching this video. If you like this video, please hit the like button. And for more videos like this, please subscribe to the channel.